Hello guys, in this video we are going to see about depreciation and its accounting. If anyone not yet subscribed our channel, kindly subscribe, bookmark. Everyone has a basic idea about depreciation. For an example, you are going to buy a car of worth 5 lakh and today after 1 or 2 years you are going to sell that car. At what rate it will be sold out? It will be obviously less than 5 lakh. For example, 4 lakh or 3.5 lakh. This is because due to the wear and tear of the car. This is known as depreciation. For example, a machine of worth 1 lakh rupees, depreciation at the rate of 20,000 every year. So that new machine value is 1 lakh, 20,000 depreciate every year. At the end of first year, what will be the value of the machine? If 20,000 depreciated means that value of the machine will be 80,000 only. Similarly, in second year, another 20,000 will be depreciated. So at the end of the second year, that value of the machine will be 60,000. Similarly, for third year, 40,000, and then fourth year, that value of the machine will be 20,000. At fifth year, that value of the machine will be 0. It means there is a no value for the machine. We have that machine will be scrapped out and we have to buy a new machine. So at the end of the fifth year, we have to buy the new machine. At the end of the fifth year, buying a new machine of the worth of 1 lakh is a problem in financially. So to purchase the new machine at the end of fifth year, we are making an at first year 20,000 depreciates. So we are keeping an 20,000 in an account. We are depositing 20,000 in an account. That how much amount depreciate, that corresponding amount 20,000 is kept in a separate account from our profit. So second year also we are keeping 20,000. Third year also depreciate amount 20,000. Fourth year 20,000 and fifth year 20,000. So we will get a value of 1 lakh at fifth year. So now at the end of the fifth year we can able to buy the new machine. Okay. What is depreciation? Depreciation is a charge to profit and loss account for the fall in value of the asset. So this is fall in value of the asset. At every year that value of the asset is decreased. So it is called fall in value of the asset. That charge to profit and loss account, that what the amount is depreciated every year, that 20,000 is depreciated, that 20,000 is kept in profit and loss account, so that at the end of the fifth year we can able to purchase the new machine. Okay, what definition defines depreciation represent cost of fixed asset to its owner which is not recoverable. Obviously that depreciated amount we can't able to recover it. Okay, provision against the loss of capital, we have to keep the provision. So 20,000 depreciated means we have to keep the provision for that amount, that is known as loss of capital. Okay, from about definition, the following fact we observe is depreciation is a part of operating cost. Yes, it's an operating cost. And then that reduction in the value of the asset, that decrease in value of the asset due to the wear and tear. Okay, and the decrease will be gradual and continuous over the period of time every year. Okay, what are the causes of depreciation? So everyone knows wear and tear, it is a main reason for depreciation. What are some other reason? Time. For example, in 1948, you bought a new car, you didn't use that new car, it's brand new, that car is not even used. At, Again in 1998 you are planning to sell it. What the value of the car? It will be an there will not be any value or negligible value. Even though that car is very new, you did not use anything, that value of car is nothing, because due to the time, over the time, that depreciation occurs. And then a new invention, for example, if you are using a machine, so next after a year, if a new invention, advanced model is launched, that old model value will be reduced. And then accident, if any machine undergone an accident, that value will be reduced. And then fall in market price is also a main reason for depreciation. For example, you are buying an iPhone of a worth of 50,000. After a 1 week, you are plan to sell it at 45,000 at a loss of 5,000. Okay, now you are planning to sell it, but at that time the company offers an discount of 10% and selling to the market at 45,000. So due to this, you can't able to sell that second hand at 45,000. Again you have to reduce your selling price to 40,000, because in market already they reduced the price. So with no other option, you have to reduce the price further. So due to fall in market price, depreciation also occurs. But land and old painting is exception. Okay, depreciation will not occur in land and old painting. Need for depreciation. Why we need to maintain depreciation? First one, to know the current profit. For example, if you are not maintaining depreciation account, 20,000 you are keeping first year, 20,000 you are keeping in a profit and loss account towards depreciation. If you are not maintaining depreciation, this 20,000 will be considered as a profit in year 1. So that 20,000 profit is excess. Actually it is not, it will be excess. Similarly year 2, 3 and 4. But at the end of the 5th year, you have to purchase a new machine at a worth of 1 lakh. At 5th year, your company balance sheet will show a loss. So to know the correct profit. And then next, to show correct financial position. So in balance sheet, fixed asset is as a separate column. So that value of the fixed asset is a main role in balance sheet. Based on that only, that financial position of the company will be determined. So to know the financial position, depreciation should be taken. And one more thing, provision for replacement. As I said earlier, at the end of 5th year, 1 lakh you need to purchase a new machine. It will be difficult to invest at that time. So every year we are keeping a provision so that it will be easy to buy at 5th year. Factors of depreciation. What are the factors will be considered? First one, cost of the asset. Okay, and then scrap value. Okay, at the end of the lifetime that you are going to throw the machine, that what is the scrap value of the machine, and then estimate number of years of its useful life. So useful life, for example, a machine is capable of running at 10 years. A machine, it will run for 10 years. Okay, what they are saying is capable of running 10 years, but due to new invention we are going to replace at 8th year. So we are going to replace at 8th year. Okay, so here that useful life is 8 year. How much period you are going to use the machine is known as the useful lifetime. We should take this one very seriously. How long that machine is going to run is not important. How much period you are going to use the machine is the useful life of the machine. This question may be asked in point 5 mark as conceptual. And then accounting entries. Accounting entries will be you have to debit the depreciation account and credit asset account. Alternate entry is you have to debit depreciation account and you have to credit the depreciation provision for depreciation account. So at the end of the 5th year, that provision account will be debited and that amount will be used for the purchase of the new machine. Next one, method of depreciation. What are the method we are using right now? So fixed percentage on original cost or fixed installment or straight line method. Most commonly we will use straight line method. And then second one, fixed percentage on diminishing balance or write down value or diminishing balance method. Third one, unit of production method. Fourth one, sum of the year digit method. Okay, first we are going to see about straight line method. So for straight line method, they given a formula: depreciation equal to cost price of asset minus scrap value divided by estimate life of the asset. Okay, divided by estimate life of the asset. Okay, a new machine you are purchasing of an worth of 11 lakh. Its scrap value is 1 lakh. Useful life is 5 years. What will be the depreciation? So a depreciation formula is cost to price of the asset. So cost to price is 11 lakh minus scrap value 1 lakh divided by estimate life of the asset, number of years 5. So 10 lakh divided by 5, we will get 2 lakh. Every year that machine will be depreciated at the rate of 2 lakh per year. Okay. And then one more important point is, while calculating depreciation for a particular year, for example, period for which asset is used. For example, you are purchasing a new machine at 1st January, but every finance year book will be closed at 31st March. So first year we have to take only 3 months. We have to calculate depreciation only for the 3 months. Okay. Example for straight line method. So Patel Transport buys a truck on 1st October 2017 at a cost of 4 lakh. The firm rate of depreciation at 10% of original cost every year. Original cost. So original cost, fixed percentage on original cost. So 10% of original cost every year. So it is an int. They are telling that it's a straight line method. The books are closed on 31st March every year. Okay. Here that value of the machine is 4 lakh. They are purchasing on 1/10/2017. So October, November, December, January, February, March, 6 months. Okay, 6 months. So 10% depreciation at 10% means 40,000 will be depreciated at every year, but at first year only 6 months. As we said earlier, only 6 months is available in first year. So for 1 year 40,000 depreciation means for 6 months 20,000 will be depreciated, and at the end of the first year that value of machine will be 3,80,000. Okay, At second year, it will be depreciated at 40,000. So the value of the machine at end of the second year is 3,40,000. And then third year, again 40,000 will be depreciated. So at end of the third year, that value of the machine is 3 lakh. So at end of the 3 year, that value of the machine is 3 lakh. But in question, they asked about truck account and depreciation account. Depreciation account means that depreciation amount 20,000, 40,000, 40,000. That 20,000, 40,000, 40,000 will debit the truck account and credit the corresponding profit and loss account. This is known as provision. So in this table you may notice DR, CR, and then 3,40,000, 3,40,000. Actually, this is an ledger bookkeeping journal. We will discuss in module B. In module B, we will discuss this one clearly. So, what is ledger? What is journal? What is bookkeeping? Everything we will see in module B. Here, just a concept is enough. The main aim of this unit 4 is we need to be clear in the concept in depreciation. So I will say some basic of the account bookkeeping. DR means debit side, CR means credit side. Always debit and credit will be equal. Okay. So you no need to confuse about this table. Only concept is important. About journal, ledger, bookkeeping, everything will be discussed in module B very clearly. Thank you for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark. In next video, we will see the continuity from write down value method.